Hello, friends. Welcome to our weekly podcast. This week with us, we have Mr. Jigar Trivedi, who is a manager of fundamental analysis for non agro commodity section. Hi, Jigar. I hope you're doing well. What is your outlook on gold for the month of August?
How are you, friend? I am good. Right. See, Karthik, in July, London gold went up by around 2.5% since Federal Reserve Chairman Jeremy Powell downplayed possibility of a rate hike in the near future. The US Fed failed to give a timeline for its tapering plans and said it was ways away from considering interest rate hikes. The dollar declined as Chairman Powell said officials had taken a first deep dive during their 2 day meeting on how to go about scaling back bond buying when the time came, but no decision on taper timing had been made. That was the reason why dollar index fell very sharply, and even the 10-year bond yield, US 10-year bond yield, declined to 1.20, almost to the lowest level in the year. On the other side, holdings in the SPDR Gold ETF, world's largest gold-backed exchange-traded fund, rose by 0.6% last week, making its first inflow in about a month. In fact, from 1,022.23 tons, the holdings rose to 1,032 tons in last 15 days. For August, I believe now focus is on a central bankers' virtual meet at Jackson Hole from 26th to 28th of August. That's the place, that's the event when US Fed Chair may provide some information about tapering of bond buying program. As of now, the outlook is bullish.
Since your outlook is bullish, can you please share the levels that we need to look for?
Sure. London gold spot has come out of a range of $1,790 an ounce to $1,810 an ounce, and now it has given close around 1813, 1815. So I think from here on the sentiment is positive, and it's heading towards next target on the upside, which is 1840, 1860 in August. As I said, the outlook is positive, dollar is weakening, investment demand is rising, and the 10-year bond yield it's falling, and there are concerns regarding the COVID variant. That's why the sentiment is positive, and there are concerns regarding the economic recovery also in globally. So outlook is positive, 1840, 1860. That these are the levels that we are looking at on the London spot. On the domestic front, Karthik, MCX gold October contract may travel to rupees 48,900, 49,600 levels also in August contract. And I think going ahead, I don't deny possibility of mild correction, but since October contract has given closing above 48,000, I think in August month we will see more inflows, more of gains in gold and silver. So since we are talking about gold here, so I think outlook is bullish, and we are looking at 49,600 as a target in August month. Yeah.
What
Thank
is
you.
your take on other bullion commodities?
Here we deal with gold and silver only on the MCX, and international silver is hovering around $25.5. In fact, it fell for 3 weeks in July, and in last week we saw a smart recovery in silver prices. It went up by around 1.2%. Silver has a dual personality, Karthik. One needs to track fundamentals of industrial metals too to understand the trend or the moves in silver. Silver is a byproduct of industrial metal mines, and it has got a very significant industrial usage also. If we talk about silver from the angle of bullion fundamentals, weak dollar, uncertainty regarding economic recovery, COVID, Delta variant, all these things are there which are supporting silver prices. From industrial metal point of view, 5G technology, wind turbines, solar panels, reusable, sustainable energy products. These are all huge positive triggers for silver prices, for the growth of silver prices in long term. But in short term, we expect MCX September silver to appreciate to rupees 68,800 to rupees 69,500 per kg in silver, as outlook is bullish. So yeah, that's all from my side. So next time we will discuss the outlook on base metals. Have a nice day, Karthik. Thank you.
Thank you, Jigar. So, friends, that's it for this week. Don't forget to tune in next week for yet another podcast. Thank you.